Good evening and welcome to our August 8th session of the Covered Options Online Learning Club. Once again, I'm Paul Madison and I'm your host of these festivities. And if you would like to reach me, you can write me at the Cool Club at bivio.com. That's the discussion list. Again, just a reminder on what Cool Club is. This is a 30-minute session where we explore the thought processes associated with covered option trades. Most sessions will walk through one or two trades from the recent past, going through the logic on why we're looking at a particular option on a particular stock. We'll look at both trades when they're put on, and we'll come back and look at them again when they're closed. Some weeks, like tonight, will be tools oriented rather than trades. So tonight will be a little different. I did want to also say in our notice that we put out about this week's session, we talked about trading options. I prefer to say what we're doing is selling covered options. The whole gamut of trading options gets more complex and gets into spreads and a lot of other things that we will not discuss at the Cool Club. We're strictly doing conservative covered options, covered calls against stock, and cash secured puts against stock or indexes. Our schedule next week, August 15th, will be at 9 o'clock, and the fourth Wednesday will be at 10 o'clock, and we do have a break on the fifth Wednesday for August. All of the recordings for all the previous sessions have been now posted and are available for your download at bivio.com. Cool Club. Just a reminder, we're continuing to build out our Cool Club homepage. Here's the current snapshot, and you can see under presentations is where you'd go for the recordings. We're going to be talking about a tool tonight. That tool will be available from the Resource and Tools pick. And then also you can see our little spreadsheet, and we have two trades on currently. The line technology call that I sold at last week's session. And then Lori had suggested putting a covered call on a SPY this week in the discussion club. And that trade is also listed on the spreadsheet. Go into Cool Club, you can check up on how those are doing. Email discussion group list, something else you can join from our homepage. Just click the Cool Club discussion list, and then you can just send questions to the Cool Club at bivio.com, and it'll go out to all to start a discussion. That's our housekeeping for tonight. Any questions at this point, Lori?
No, I don't see it. But if anybody does have any questions, just go ahead and type them into the question box that you see on the lower right side of your screen.
Okay, very good. So tonight we're going to work on a tool. It's a covered call, cool tool. And we'll go through the tool and then actually work through some specific examples. I'll use Align Technology, our old standby that we've sold calls on a couple times, so you can see how that works in the tool. And then we've had a few stocks mentioned in the Cool Club discussion that people would like to see. Apple and Cognizant, Pepsi, and Research Laboratories, Inc. And so if we've got time, we'll work through as many of those as we can tonight as well. And I appreciate everybody throwing some suggestions in. That was great. All right, so on our cool tools, just want to go ahead and specify I'm using Excel spreadsheets, and they are for Windows. They will definitely work with Office 2007 and Office 2010. Most of the time, like the one we're going to work through tonight, I believe it'll work with the two previous versions, but I haven't tested it for certain. And so if you've got an earlier version of Office and have a problem, let me know so that I know if it does or doesn't work. I don't know that I'll be able to correct it, but at least we'll be able to specify that it doesn't work with previous versions. Current version definitely does not work on Office for Mac, but I may be working to correct that in the future. For this to work properly, when you bring it in, you will need to do some security things. There'll be a question that says, this has macros in it, do you want to enable them? And the correct answer is yes. There's only one simple macro, but it resets things. So I'd encourage you to say yes to allowing that macro. And then there are also external data sources, primarily, or just MSN quotes. And so if it prompts you to enable external data, again, you'll need to choose yes for that question. As I said before, we're working you download it. So if you, on the Cool Club homepage, if you click on Resources and Tools, you'll see a new little addition that says Cool Tools, and the only one that's listed there right now is the covered call Cool Tool, and that's what we'll be working on tonight. Again, Lori, any questions at this point?
No, you're all set.
Well, then let's go play. So this is the Covered Calls Cool tool, and when you bring it up, it should look just like this. I want to point out one thing down here in the lower right-hand corner, and that's a little box that's kind of like some user defaults that are around your specific commissions for the broker that you use. In this case right now I've got $7.95 in for the base and a per contract of 75 cents. That would be what most people would see at Fidelity. But if you're doing the virtual online trading system at the Options Industry Council and you want to simulate what you're going to see there, we could put in $14.95, and I believe they don't charge anything per contract. It's just $15. And that'll stay for everything you run through it until you change it again. So that's just something you can change once and leave it if you're only trading at one broker. If there is any data in the sheet, you can always start it by hitting this Enter Ticker button, and it will clear the sheet and leave your cursor in this box. And so the first stock we're going to work through is Align Technology, and so we'll put in the ticker. So ALGN. When I hit enter, it goes out, gets the last price for the day. That will be a 20-minute delayed quote if this is during the market. Because the market's closed, that's obviously today's close. And then also tell you what the change was for the day. The next place, and your cursor will automatically go down to it, is the beginning of these fundamental stock questions. And this is walking you through the kind of thought process that I work through when I do covered options against a stock. So the first question is, has a line gone up for a while? And a while is somewhat loose, but it means you've seen a sustained rise for a period of time. And so we need to go figure out whether it has or not. And I'm going to go over to stock charts. And you can see I've already got Align Technology in, and I have my graph up. And we can see the overall trend has been up, although it's had some ups and downs. And about a month ago it kind of traded down, and then over the last week to 2 weeks it's been trading up a bit. So I'm going to go back to my spreadsheet. And by the way, these yes-no questions you can answer with a Y or an N or yes or no, caps, lowercase, whatever, any of those combinations will work. So I'm going to say yes, and I'm going to go on. Now, there are, yeses are the obvious right answer a lot of these questions. If you say no to a question, it'll say give you some information, some advice on what you might want to think about. So if I say no, line has not gone up for a while, then what it says, well, it's better to sell after a run if you're selling a covered call. So that's kind of challenging. Are you sure you really want to be selling a call here? It's not to say at the end of the day you still don't do the call, but it's really saying it's going to work better after the stock has been moving up for a while. So we'll go back to yes there. The next question is a line up on the day. Well, we can see up here, no, it's not. And again, it says you're really better off selling a call on a day that it is up. These little triggers by themselves don't tell you you shouldn't do it, but if you start getting a preponderance of little red messages, then it says you probably should be thinking about doing it at another time. Next question is the market up on the day, and I didn't see the very end today, but it was a bounce around today. It was more or less flat, but I'm going to say yes, I think it ended up slightly up. It wasn't a big up. The next question is how many shares do you own? Again, this is a place where if you say, well, I own 85 shares, the spreadsheet's going to tell you you need to have over 100 shares to be able to sell a covered call. Now, in the case of a line, as you know from the two examples I've talked about, I have 300 shares, so that passes through fine. Next is a question around what do you view as your minimum sell price? Again, you've heard me say before, a line is a stock I bought for about $24 at the beginning of the year. My minimum sell is about 33, which is about a 35% gain on the stock in a very short period of time. So I could put 33 in there. And I get a little flag that says this 33 sets my minimum strike price, and we'll see that again as we move to section 2. The next question is, are you in a mood where you feel like the stock might move down from here even though it's been moving up? And this is there's no perfect answer to this, and nobody has clarity around these kinds of questions, but it's really asking you, are you concerned that it might go down here? If you say yes, it passes through. If it says no, if you say no, the recommendation is, well, you might want to wait to where you think a turn is about to happen where the stock might be close to falling or dropping. Again, on a line, I'm going to go back and say yes. Next thing it asks is, when is a line's earnings date? Again, let's go back over to a browser. If we go to Yahoo Finance and put in the line technology, the first thing we get is this summary page. And while we're here, the first thing I want to get from the summary page, if I scroll down under key statistics, it'll tell me the next, ex-dividend date. And for stocks that don't pay dividend, they're going to say not applicable. And in this case, a line doesn't have a dividend, so I know that because that's going to be part of my questions on my spreadsheet as well. Then the next thing I want to do is go to company events. And at company events, it will tell me earnings announcements. So I can see the last one was on July 19th. Now Yahoo currently isn't posting what the next one is. So let's go back to my spreadsheet and let's try and put in July 19. And we get a little error box and it says that date is in the past. Please input the next earnings date in the future. If it's unknown, add 3 months to the last for an approximate date. And I say, okay, so if it was July 19th, then roughly something like October 19th is going to be the next earnings date. Next question is, does the stock pay a dividend? We know that it doesn't, so I can skip the box for my ex-dividend date. that takes us over to looking at Section 2, and what Section 2 is helping us to try and select a possible option. So we know we're selling to open a covered call. I'm going to show you the three most recent expiration dates. A weekly if it's available. So if the stock has a weekly, that would be an August 10th expiration. Front month, which is the month that we're in as long as we haven't passed the third Friday. In this case, we haven't. And then second month, the next month out. Those will all automatically change as we go through. Whatever day you bring it up, it will bring up the right expiration dates in here. Next line is the minimum premium that we want to look for. This is a calculation that's based on my target APR of 20%. So to get a 20% APR on my weekly, which is almost over with, I need to be collecting at least 19 cents. On my front month, which is also starting to get close, it's only a little over a week out, I need 34 cents. And for the September, I'd need $1. And remember, we put a minimum sell price over here that directly falls over into our box that tells us what kind of strikes to look for, and we want to look for a strike above $33. So I'm armed with some information on what kind of premiums I want to look for, and I can now go over to the virtual trading system, and in particular, if I say find chain, and hang on, it was buried in the back, it pops up this option chain, and it always defaults to SPY, so you got to put your ticker in. So we're now looking at a line. We can also say we only want to look at calls, and we may want to, near the money is fine, and let's say view chain. So you can see we don't have weeklies. We only have August, and there's 9 days to expiration, so that would be the front month. And we can click on September, and we can be looking at the second month. So let's go back and look at our August. So our out-of-the-money calls, because Align technology is at 34.59, our out-of-the-money start at 35. And we know we want to be above 33, so 35 is a good place to start. And we can see that the monthly bid for a August 35 strike is 60 cents. So we can take that back to our spreadsheet. We can put in 35. The expiration date is actually a little drop-down pick box, and you can say August 18th, which is this front month. And then what premium, we say 60 cents. And by the way, there's some smarts here too. If I say I want to do 4 contracts, it says you don't have enough shares for that number of contracts. So that's right, I only had 300 shares, so I'm going to do 3 contracts. The 3 contracts tells me that I'm going to get an APR of 58%, and what I would collect net of commissions is $165 and a nickel. Now, there's often a few other pennies thrown in, so this is an approximation of the premium you'll collect. It should be within a few pennies. More, I guess, if you're doing a large number of trades, but it should be close. Now, that was for the August. I might want to go back and say, well, I want to look at the September. And so the $35 call, the best bid at the end of today was $1.75. So go back to my spreadsheet. I'm still at a 35 strike. I'm going to change my expiration to September 22nd, and I'm going to put in $1.75. We can see the APR actually went up, and obviously we're going to collect more money as well. It's then up to you to try and decide which makes the most sense for you. Now you might say, well, I obviously like the larger APR and the larger premium. The one thing I would throw out as food for thought is, yes, that's true, but by doing the August, which expires next week, as soon as those are done with, we could turn around and do the September. So there's a possibility that we can do one now and shortly after next Friday do another one for September. And so our overall gain is going to be even more. Oh, and I guess I was wrong. The APR is actually higher on this. So this is a 58% APR. And that's again because of how few days are left to next Friday. So 58%, or September 20, $1.75 was a 40%. I guess I'd stop at this point, Lori, and before we go into some more examples, and just say, are there some questions that people have?
I've been getting a few questions. Maybe you want to talk about this out loud. Dan Haas was asking about whether you included the assignment commission when you calculate the minimum premium.
Good question. I have left assignment totally out of here in that what we're talking about is the sell side of the covered calls, so the assignment's not in here. And so this isn't about closing the option either through being exercised or buying it back. And I'm going to be presenting another tool or a tweak to this one where you'll be able to look at either the buy to close or if it's been exercised or signed. Right now this tool is just looking at the sell side of putting the covered call on, so assignment is not part of it.
And then somebody is asking, has the net premium taken into account the commissions?
And yes, it has. The net premium will take into account your commissions. And as an example, if I go change to Fidelity's commissions, $7.95 and 75 cents, you can see now my net premium has gone up a little bit.
Butch Lang was asking what the APR would be if you had gone with an August 18th call.
Right, if I do the August 18th, which right now I can sell for 60 cents, it was actually, and before it said a 60%, or excuse me, a 58% APR, that's where the APRs are sensitive to these commissions. So if I go back to my options simulator and put those commissions in, you can see my APR drops because I'm collecting less money. So that APR is also net of commissions. Net of commissions on the sell side.
So here's another question. Might the September 22nd premium go down after August 18th is passed so that the premium could be much lower for September 22nd just because of that, and would that make the September 22nd premium the best one?
Well, yeah, and there's a lot of factors that go into that. In general, time premiums will decay with time. So a week from now, if the stock is at exactly the same price, yes, the premium for September will have gone down. But if the stock goes up, then the premium will go up because of the underlying stock going up. And so it's not as easy as saying, yes, I can unequivocally predict that it'll be lower after next Friday. In fact, what I will tell you, there will probably be opportunities after next Friday to be able to even maybe sell it at higher levels. But depending on what happens to the stock, you're right, the current $1.75 might be better than it ever is after next Friday. That's a guessing game.
Paul, did you mention what minimum APR you're trying for here?
Yeah, so this minimum premium that is up here, those are calculated based on a 20% APR. So just for fun, and they're also based on only one contract. So if we put in one contract in our August 18 and we put in the 34 cents up there, you'll notice the APR goes to 20%, which is what I'm using to calculate the minimums that I'd like to see you sell it for. And same if I go out to the September 22nd and change to $1, I'm sitting at 20%. Those are also sensitive to these commissions. Same thing. If I go change to $7.95 and 50 cents, you'll see, oops, not $50, 50 cents. You'll see the minimum premiums change slightly. And so now my dollar out in September actually is giving me a slightly higher APR because of my lower commissions. Now if I go to the 94 cents, I'm just showing that it is sensitive to these commissions and you need to think about your commissions that you're paying. By the way, I now said I sold this at 94 cents in one contract. One other thing that gets flagged is my desired target of trying to make sure I always collect at least $100 when I'm selling covered options. And again, I use that as a threshold just to try and minimize how much of my gain is being eaten up by commissions. If I sell a trade at $100, then my commission is only about 10% of the gain, and that's about the highest amount I want it to be. More questions, or should we run through a few more examples?
There's a couple more questions. Butch Lang was asking whether you have a minimum number of contracts that you use as a guideline.
I don't have a minimum number of contracts. I have a minimum amount of money I want to see, and I want to see a net of $100. And so it just depends on the stock. You know, on something like a line, you might have a hard time getting to $100 with only one contract. Let's move to another example, because I would like to work through a few of these that were suggested by the discussion list. So we have lots of information in here. If we click on this little button that says enter ticker, clears all of our data, and it's ready for our next ticker. And one of the recommendations was Apple. So if we put Apple in, tells us that today it closed right around 620. Has Apple gone up for a while? I'm going to, rather than going out and checking all these things, I've already kind of looked them up ahead of time, so I know Apple has been moving up since their earnings. Is Apple up today? No, we can see it's not. Is the market up today? Yes, slightly. Number of shares, I think we only had 100 shares. Minimum sell price, the person who recommended this said, let's see, I believe it's 625 to 630. No, I'm sorry, 635. So if we put in 635, do you feel like the price will go down? Yeah, I'm a little worried that maybe we've run a little quick on it, so I could see it turning. Next, Apple's earnings date. Well, we know the last earnings was July 23rd, so again we can add 3 months. We did October 23rd. Does Apple pay a dividend? Yes, it does. And so next it wants that ex-dividend date. Again, let's show you how that looks. So if we put in Apple here, and it'll go to the summary page, and we scroll down to the key statistics, it tells us Apple's ex-dividend date is August 9th, which is tomorrow, so I put 8/9 in. So we see for the weekly, for the expiring August 10th, we need a minimum premium of 76 cents. For the front month, we need $3.48. For the second month, September, we need $15. So let's go look at our option chain. So we put in Apple and view the chain. In this case, you can see that weekly and August both show up. So the first one, let's see if we click on August 12th, it shows us our weekly, expires August 10th, and then it shows us our monthly that expires on August 18th. We were looking for a 635, and we see 25 cents for the 10th, and we see $1.75 for the August 18th. So let's go look at those. We're going to say a strike of 635. What expiration date? Let's try the weekly. And the premium was 25 cents. How many contracts? We're only going to do one. Now, we get a little red flag that says the ex-dividend is before the expiration. And actually, the last day you can own the stock and collect the dividend is the day before ex-dividend, and so that was today. But this is just a warning that if you sell an option that crosses over the ex-dividend, you run the risk of the stock being called away early. That's the one time, or one of the few times, that options get exercised early, is if the person who bought the option decides they want to buy the stock at the strike and collect the dividend. Now in this case, we're quite a bit out of the money. I doubt somebody's going to want to buy it away from us at $635 when they can go buy the stock at $620. So I don't think that's a big risk on the 10th. What do we see? That 25 cents is a pretty minuscule 5% APR, and we're only collecting $16. Let's go out to the August 18th. And we said that premium was $1.75. What does that tell us? Well, August 18th is actually also after the ex-dividend date, so our flag still stays up. We're doing a little better on the APR, and we've gotten over our $100, but you can see we haven't met our threshold of a 20% APR. We're about half of what our minimum was up here, so we didn't even have to really run it through the calculator. Now, and I'm just going to do these because I went ahead and got them. If we decided to look at the 625s, which is a little closer to the money, let's start with August 10th. The 625s, which is only $5 out of the money, still has a $1.19 premium. And so if we wanted to sell a 625 that expires this Friday, we could collect $1.19. That's a 33% APR. We're over our $100 threshold. The 625 for August 18, premium at the end of the day was $4.20. Again, we're over our 20% APR, and our premium collected is obviously way over our $100. So this is what will test your mettle on, is 635 really my minimum sell price? If it is, you've got no business selling a 625 and running the risk of being called away. But if you, for whatever reason, feel like you might actually be happy with a little lower price, then you may want to look at options on down the chain. Any questions on Apple?
Donald, I was asking if you use near the money for most of your trades, or do you tend to go out of the money? Or
what I like to do is try and go as far out of the money as I can and still get a 20% APR. Now, depending on the company, that you won't be able to go very far. And in fact, you might have to be near or at the money to be able to even get a 20% APR. But in general, what I try to do and look for is as far out of the money and still keep higher than 20%. And I personally would rather do a further out of the money right at 20% APR and not worry about being called away, and worry is the wrong word, but just reduce the risk of being called away, than do a closer to the money and get a 40% APR. But that's going to be something you have to decide for yourself on what your thresholds are. We are past 6:30. I'd like to run through a few more of these. Let's do another couple. One that was suggested was Pepsi, and I think it goes well to the question that was just asked. So today Pepsi closed at 72.57, up a little bit. Has it been going up for a while? Yes, it has. Is it up today? Yes, it is. Yes, the market was up. Number of shares, let's say we had 100. The person bringing this to the Cool Club said that their sell price was in the 73 to 75 range. So I'm going to say 75. Or actually, let's say 73. It has been running. I feel like it might taper off. When is the next Pepsi earnings? I've looked these up ahead of time, and so the last one was July 25th, so 10/25. And yes, they pay a dividend, and their ex-dividend date is September 5th. Oops, sorry. Yes, they pay a dividend, and it is September 5th. All right, and so the first thing I did, and I'm going to jump to these, I looked at 75 strikes, and for the August 18, my premium was a penny. Not very interesting. We're going to lose money on the deal because of paying commissions. We obviously don't want to do that. The September 22nd was not much better. It was 19 cents. Again, pretty minuscule APR, not a lot of money. And by the way, both of these start becoming potentially a problem because of the ex-dividend date. The September 22nd is after the ex-dividend date of September 5th, and Pepsi's dividend is almost 54 cents. So selling something like this, if the price ran up, somebody might want to call away early to get their dividend way ahead of the expiration date. So this would be a risk for that. So the next thing I did was say, well, he said his sell price was 73 range, so what if I go closer, and it's actually 72.50 is technically in the money by 7 cents, but it's at the money, and see what those premiums look like. And so for August 18, it was 49 cents. Look at that. I just barely met the 20%. And for September 22nd, it was 97 cents. And that one doesn't reach it. So the only one that's close is the August 18 at 49 cents. And again, one other caution on this one is I'd want to have more than one contract. If I'm only doing one contract, you can see I'm only collecting $40. It doesn't meet my threshold on what I'm trying to collect on a option sale. Your threshold may be different. Maybe time for at least one more. We have Cognizant, and it has popped recently. I don't know that it's been up for a while. I might even say no to that question. Yes, it's up today, and it has popped right after earnings. Is market up today? Yes. Number of shares, we'll put in 100. Your minimum sell price, we're going to say 70. Feel like the price will go down? Yes. Next, Cognizant earnings. The earnings just came out on August 6th, so if we add 3 months, a rough earnings date is November 6th. Do they pay a dividend? No, they do not. So what strike? Well, I went and looked at a 70 strike, and they don't pay weeklies, or don't do weeklies. So August 18th, a 70 strike was 70 cents. And we're doing one contract. So we've got a nice APR, but with one contract, we're not reaching the $100. So if we had 200 shares, we could do 2 contracts and we'd be over our $100. Something I meant to mention when we were talking Pepsi, and I'm not going to bring it all back up, but an important thing is you may look at a stock that you own and say the premiums are not very good and I'm not getting very decent APRs, so I can't sell calls on Pepsi. Well, that'll vary from time to time. You might not be able to sell calls on Pepsi right now. People may not have a lot of angst around whether Pepsi is going up really strong or dropping off, and angst is what drives good premiums. But come next month, there might be a story on Pepsi. Maybe they've announced a new strategic plan, or maybe they've had some kind of accident. I mean, the story can be positive or negative, and that brings angst into the market. And so where you couldn't sell calls on Pepsi this month, that doesn't mean next month you might not be able to based on news that's out in the marketplace. So don't ever give up on a stock just because you looked once and the premiums weren't very good. So one other real quick, Research Laboratories, Inc. Closed today up 65 cents, a little over 27. And yes, it's been up for a while. Yes, it's up today. Is the market up today? Yes. Number of shares. Let's say we had 300 shares. Your minimum sell price, the person who suggested this said 30. Feel like the price will go down? Yeah, I do. Next BRLI earnings date. Well, the last earnings were June 7th, so we can estimate that earnings will be September 7th. That one we might actually be able to tie down right now, but the last, when I went looking, all that was reported was the last that they gave. So this is close enough. I'd want to tie that down. Do they pay a dividend? No, they do not. Strike price, I actually, on BRLIs, I went up to the $30 level, which is the first out of the money because our stock price is 27. My August 18s were 15 cents, and I'm doing 3 of them. I don't even have to put the 15 cents in because it has not met my minimum up on the sheet. September 22nd were 30 cents. And again, I don't have to put it in because they're quite a bit lower than the minimums below. So BRLI, for whatever reason, at this 2 seconds, I can't sell out of the money and get a decent return on the sale. So I wouldn't be doing a BRLI. I personally wouldn't want to jump down into the in the money on them. In the money, you might be able to get a good return. This return calculator is really aimed at calculating returns on out-of-the-money options. So those are our examples. I'll go back to see if there's any other questions.
I guess just one question on what you're doing right now. You said the minimum sell was 30, but did you enter 25? Yeah, you did.
Yeah, this is my minimum sell price. Current price is actually above the 25, is at 27. Just because my minimum is 25 doesn't mean I should be happy selling it even higher than that. So I want to look for strikes that start at 25 and going up. So the strike I picked, the only one that was out of the money was a $30. Now the question may be, if your minimum sell is at 25 and you're already at 27, maybe the right thing to do is go ahead and sell if depending on your basis for that minimum sell. And that's a different question. All this is trying to say that's the floor for my strike prices. I want to look at strike prices above it. And so I'm looking at 25 and above, and the only one that was out of the money was 30. Let me pop back real quick to our slides. We've got a homework assignment this week. It's a posted assignment, no grades. We've got an exercise we think you might find fun. It's to sell a covered call on Walt Disney, and I've provided instructions on how to set up an Options Industry Council account, how to buy a position in Disney, and then using the covered call tool, you can decide which day to sell a call and which strike to do it. So detailed instructions, they're posted under the presentation links. It's a file that's called Disney Project. And if you download that, print it, it'll walk through the steps of setting up the virtual account. And then what I've proposed in the exercise is, after you do one, is that you provide the information back to the Cool Club on what you sold, when you sold it, what you collected, what your APR was. And next week we'll tell the results of which of the coolest kids had the highest APR on the covered call that they sold on Disney. And you might say, why Disney? Well, one of the reasons is because tonight there was an article that came out in Barron's. It says Parks and Cash in Disney. It says media conglomerate and theme park operator stock hit an all-time high after quarterly earnings topped street estimates. And Barron's saying expect more magic. An article like this can build hype in a stock. So over the next week we might see real interest in buying Disney, and we might see real interest in people buying options, wanting to make sure that if it takes off that they can buy at lower prices. This is the kind of thing that could generate good premiums on Disney. Now, before this article, the premiums were actually pretty small, so this will give you something to kind of watch for a few days and see if it does generate buzz and does generate some interesting option premiums. Next week, August 15th, 9 o'clock, so we're an hour later next week, and we're going to be covering buy to close on covered calls. I appreciate everybody coming and turning out. I hope you enjoyed this, and I hope you enjoy the Cool tool. I will make the caveat that the Cool tool is version 1. It is in beta. I think it's pretty solid. It's been tested by several of my beta testers, but I'm sure we'll tweak it and add things to it, and we'll update whenever we do put a new version out. My intent is to eventually also provide additional mouse over information that kind of helps you provide some color to each of the topics or questions. Enjoy, and good night.